hypothesis, to me, was what? Kind of counterintuitive, because you're saying government should stop putting more money into their economies, stop trying to fix supply chains at a time when policymakers are actually then going to have to raise interest rates even more, because it may make inflation worse. I don't get it. What's happening?
Well, basically, our thinking in economic policy making, and in particular in monetary and the fiscal area, is that the supply or aggregate supply in the economy, which is basically production, is completely elastic, and therefore the only thing that matters is fiscal and monetary policy to determine inflation and growth. But what we have seen is that the shape of aggregate supply has changed, and therefore, depending only on stimulus, you can affect both growth and inflation. And now that we have inflation, it's very important to mind in which way can we stimulate growth without depending so much on aggregate demand. And that basically implies go into the nitty-gritty of what really creates economic activity. You know, all the factors that affect the shape of aggregate supply.
Okay. So what should be central banks doing while many of them are, fighting surging inflation, getting ready to raise rates more? What should they do?
Well, at this stage, to basically bring inflation under control. I think to generate more growth, you need more savings, you need more investment, and a key determinant of investment is the real rates of interest. So if central banks are successful in stabilizing inflation soon, the consequences on real rates of inflation will be minimal. Therefore, that should stimulate investment, that should stimulate aggregate supply, and that should preserve a better balance between growth and inflation.
Is this a bigger problem for emerging markets? Is it a bigger problem for developed countries, which are the ones that have all the fiscal resources to spend? Who does this affect the most?
Well, I think at this stage it's more a problem for advanced economies. I think advanced economies have overused fiscal and monetary policy to get economic activity going. And what we have seen, and that's what I claim in my speech today, is that those policies have hit a limit. The policy space is not there any longer. Take, for example, monetary policy. If you implement a very aggressive monetary policy, it would only go to inflation.
Right.
If you stimulate too much the economy to fiscal, it will enhance also debt, it will increase aggregate demand, and will also generate more inflation. And therefore, what fiscal policy is bringing will have to be taken away by monetary policy.
Now, in a previous life, you were the head for many years of the Banco de Mexico, Mexico's central bank. So you had, in fact, you got into this when you were dealing with very aggressive inflation in Latin America. Share, what was the lesson learned there? What's the lesson for today?
Well, I mean, for example, you take today the Mexican peso. The Mexican peso has been relatively stable. And I think what has happened is that Banco de Mexico, together with other emerging market central banks, reacted to the inflationary pressures very quickly in a very decisive way. Therefore, I think that what we learned after so many spurts of inflation is that you need early and determined and very, very persistent action against inflation.
So, have countries, I mean, the Latin American countries were the most aggressive rate hikers, right? And
yes.
They threw around 7,500 basis points like nobody else in the world. So, did they learn the lesson? And have they kind of beat their inflation? Are they peaking? I think that's what the people are wondering how long this is going to take.
Well, I mean, they're still not done as many other central banks, but I think they're ahead of the game. If you see the consequences of the global forces for more inflation, the impact on emerging markets have been proportionally less than in advanced economies. The fact that inflation between Mexico and the U.S. is the same, that means that proportionally the impact on inflation in Mexico has been less. So opportune, decisive action is very, very important, and therefore I fully subscribe to the announcement that today was made by Chairman Powell.
Okay, very quickly though, and you support the announcement. I got to quick that quickly. You support his statement. Why and what do you support about it?
The clearness of the message, the fact that this is not a sprint, it's more like a medium-term run. And you have to be very perseverant to bring down inflation under control in a decisive way.
And you've been there, done that, so you know.
Absolutely,
okay.
Yes.